You've probably heard of these three letters before: NFT, or non-fungible token, many times on your YouTube feed. You might have heard about how the technology works, and you might have heard of Beeple's record-setting $69.3 million sale of an art piece in 2021. However, at present day, the news have died down a lot, and the prices have come down a lot with it. Does this mean that the NFT market was a bubble? Does this mean that as everyday investors, we should get in now that the price is down? Come along, we'll discuss all of this, and let's find out. Before we start, I wanted to let you know that these videos do take quite a while to put together, and none of this is coming from my own brain. I listed all the sources I used below in the description. Now, if you would like to see more pieces on various interesting topics, bump the subscribe button, hit the bell notification icon, and I promise you won't regret it. First of all, NFTs are often referred to as digital art pieces secured on the blockchain, but NFT is purely a technology that can be attached to any asset. Now, they exist to make cryptographic representations of assets to ensure their uniqueness. To illustrate the utility of an NFT, we can first look at Bitcoin, which is a digital token. Bitcoin is fungible, meaning that it's replaceable. Every Bitcoin is as good as the other, and in a similar sense, cash is the same as other cash. Who cares where a $20 bill came from? It's the same value as the other $20 bill. However, let's say you have a special Bitcoin, one that was signed by a celebrity. So it needs to have some sort of proof that it has a unique certification of being signed by a celebrity. This is where NFT comes in. Now, this Bitcoin is non-fungible because it's unique, it's one of one, and it's signed by a celebrity. By moving this Bitcoin to a non-fungible token, it can be digitally certified, similar to a certification of authenticity. And this will ensure that its uniqueness will be permanently stored on the public blockchain ledger. So this is a question that I wondered myself when I first learned about NFTs. What are you actually buying? Now, buying an NFT doesn't really have a standard definition at the moment. Sometimes it could be a transfer of a unique collectible, or it could entitle you to commercial distribution rights, such as the purchasing of a custom URL, or new forms of NFTs, such as customizable art pieces that allows you to change certain colors or elements of an art piece, including Mike Raymond's work, The Pioneer. However, to really sum it all up, NFTs is all about owning digital assets. And NFTs really secures that ownership by stating that your asset is one of one, it's unique, and it's certified, as we mentioned before. We'll go more into this soon, but just note that buying an NFT means different things depending on what the seller is conveying. In order to assess if NFTs are a good investment, let's look at Katana Capital's 8 metrics of defining a good investment. Now let's bring the investment scorecard out now. 1. Fairly valued. This is a new asset class, and because NFTs are liquid, one-off assets by nature, giving a fair value is very difficult due to their non-fungible nature. 2. Underlying value will increase over time. We have no data to show that NFTs will increase over time, especially since broader markets have begun to falter from the January highs. 3. It is diversified. NFTs are a single asset and not diversified by nature. Unlike investments such as a share of a company, which have elements of sector risk, company risk, and human capital behind the share, NFTs are a singular digital asset, which is non-diversible by nature. 4. It diversifies your portfolio or reduces portfolio risk. Well, this factor is subjective. Adding an NFT to an all stock or all real estate portfolio could potentially bring down portfolio risk, but you could arguably attribute this to any other asset class as well. 5. It is liquid. NFTs as non-fungible, secured one-off assets that are not traded regularly. It means that price transparency is incredibly low, which we will discuss later in the risks section. 6. It generates income. No income is generated other than the sale of the asset, which holds the same qualities of real-world assets such as art pieces or collectible cars. There is zero element of passive income, but rather a cloudy, appraised theoretical value. And 7. You understand the product and its risks. This one is hard to define, but arguably we do not completely understand a market, especially since NFTs have only been around for under a year. And 8. It is regulated or protected. Unfortunately, NFTs do not have the same qualities or protection as investing in insured assets secured by banks, for example. If you lose money in an NFT or you have it stolen, there is no recourse. No cryptocurrency police is going to track that down for you in that sense, and crypto assets do have a much higher platform risk than traditional assets. On almost all the metrics above, it's not looking great for NFTs. But that's not to say that you can't make money or buy NFTs as a good investment decision. What I'm saying is that it doesn't fulfill many of the qualities of what a traditionally good investment is like. And as an everyday investor like you or I, do proceed with caution and do not have this as your sole component of your portfolio. Let's move on to the first risk of NFTs, and that is illiquidity. One-off instruments such as NFTs are inherently hard to sell. When we look at stocks or bonds, they have perfect price actions because they're traded every microsecond with perfect supply and demand. A share of Apple fluctuates all the time, and you can look it up on demand. Now, the fair value of an NFT or JPEG or a GIF, we don't have a clue what quote-unquote fair value is. You can only gauge prior transactions to see what the price should be. So very simply, when you look at Sotheby's auctions, for example, how do we know the value of a painting? Well, let's look at currently Leonardo da Vinci's Salvator Mundi or Jackson Pollock's 17A, very famous paintings. We don't know how much it's worth at current day, but we know that it sold for 450 million and 200 million at the time of their prior auction. Now, this translates very closely into why there was a silent NFT market crash, as Tuba on Twitter denounced, as most people would not have known that prices on NFTs have come down from their record highs. This is a byproduct of illiquidity. In a recent article by Vice, they mentioned that people who were buying NFTs often went back and found that their NFTs disappeared. And Vice explained that when you buy NFTs, in most cases, you're not actually buying ownership rights to an artwork or even a digital file. Instead, you're buying a little bit of code that references something else on the internet. And unfortunately, with the blockchain, you can't enforce ownership rights. So let's put this into context. Let's say you buy an NFT that references a Twitter post. If that Twitter post gets deleted, consequently your NFT will be referring to something that doesn't fundamentally exist. And in that case, it disappears. So the moral of the story is you have to be really careful about what you're buying. Not NFTs are all made equal, and not all NFTs have the security that you would expect from a traditional purchase. NFTs right now are basically worth exactly what people are willing to pay, and its price is dependent on another person willing to pay more for it, and that's how profit exists. This is really the only thing affecting and determining the price of the asset, and because of that, it becomes a little bit of a dangerous bet. It's similar to the tulip bubble, where before people were hyping up the prices of tulips based on the fact that they think the next person would go back and pay more for the tulips, but no one actually wanted tulips themselves. Nonetheless, I'm not saying it's as severe as that, but in recent months, there's been certainly elements of bubble behavior, so it's something to keep in mind. Now, the fourth and final risk I want to talk about is platform instability. NFTs are inherently based on platforms, and there's major ones such as Decentraland, OpenSea, or CryptoKitties, or many other NFT marketplaces, and there's no guarantee that it's going to exist in 1, 5, or 10 years. Investments, as we've discussed before, need to be long-term, liquid, and safe when left untouched. And because these platforms are so new, just like a cryptocurrency exchange could shut down any day, it's not guaranteed whatsoever. And that's where platform risk comes in. Take an example such as Steam, which is a gaming marketplace where you can actually host a lot of different games and also host a lot of different items such as skins for a weapon or hats and visual additions for a character. Some of these sell for thousands of dollars, and that's because the game is very popular, and two, there's a huge demand to look cool in those games. But what if one day those games become unpopular? What if those games shut down? Your items become worthless. So as something fun, I agree, it's very, very fun. But as an investment, it's a little bit of a gray area, in my opinion. As we've discussed the risks associated with different hosting platforms, let's not forget that NFTs originate from a blockchain host to be created. There's platforms built about Ethereum, EOS, Wax, Bitcoin Smart Chain, Tron, and others. And you need these coins, blockchains, to create an NFT based on their token standard. In my personal opinion, investing in these platforms is another way to get subsidiary exposure to NFTs without the inherent idiosyncratic risks of NFTs. Right now, Ethereum is by far the biggest platform, and if you wanted to see why I have such a bullish standpoint on platform coins, you can check out the video in the top right banner. But right now, let's take a quick look at the token ecosystem again, and with the number of different marketplaces, collectibles, and infrastructures in place to support the NFT market, we can see that there's a lot of diversity in terms of platforms and in terms of things that you can buy. Do you think that all of these are going to exist in the next decade and serve as a great investment? I do have my doubts. I think certainly some of these are going to disappear. I don't know which. That's up for you to decide. But basically, invest at your own risk, and just know that picking valuable NFTs is definitely not as easy as 1, 2, 3. This far to the end of the video, thank you so much for watching, and if you'd like to see more content like this, please hit the subscribe button. I promise I will deliver you the value for that. Now finally, I'd like to end off with a few quotes that summarize the situation of NFTs at the moment. Beeple mentioned that everyone was super hyped about it, but it didn't kill the internet when the bubble popped. It just wiped out all the crap. And what he thinks is that projects that are hype and not real NFT projects will go to zero, and those who have value will stand the test of time. Great point, people. And secondly, the future of NFTs and investments is incredibly uncertain. If you're looking to buy an NFT in the hopes of being worth more in the future, probably don't buy an NFT, Mose says. For most NFTs, there is really no benefit to long-term hodling, which sums up the essence of this video. Holding for the long term isn't necessarily what people recommend for NFTs for a multitude of reasons, as we've discussed. Now, this is an incredibly exciting time. New inventions such as NFTs are always fascinating to see, and I have no doubt in my mind that this technology is here to stay. However, it is up to you to decide if any specific NFTs are actually an investment that will be worth it. Unfortunately, I don't have a crystal ball to say which NFTs are going to be good or which coins are going to be the best in the next decade. However, with the information in your hands, it's up for you to do your own research and make those decisions on your own. If someone tells you otherwise, don't necessarily trust it. The best person you should trust with your own money is yourself. Now, I'd really appreciate a like and subscribe if you enjoyed the video. And that being said, I hope you have a great day, a great month, and a great year ahead. Take care, everyone.